All right, today we're going to unlock a really powerful mental tool for any investor. It's called second-level thinking. Now, really, it's just the art of looking right past the obvious headline and asking one super simple but really profound question. And then what? Let's dig in and see how it works.
Okay, so first things first, we have to talk about the trap that catches so many people. It's a way of thinking that feels right, It feels intuitive. But more often than not, it leads us straight down the wrong path.
So I want you to picture this. A brand new gadget is absolutely everywhere. All your friends have it, it's all over your social media feed, and the company's sales are just through the roof. The easy, immediate thought is, wow, this company is great, I should buy the stock, right? Well, that right there, that's the definition of first-level thinking.
Think of it like a giant iceberg. First-level thinking is just seeing the tip that's above the water. The company's doing well, so the stock has to go up. It's what everybody sees. But second-level thinking, that's all about what's hidden underneath the surface. It forces you to ask, okay, sure, the company is succeeding, but what happens because of that success?
This is where we learn the mentor's question. It's the simple little phrase that unlocks a whole new level of analysis. It's what really separates the consistently successful investors from the rest of the crowd.
So here's the crucial point. Second-level thinking isn't about predicting that first immediate effect. It's about thinking in chains of consequences. If A happens, what is B probably going to do? And if B happens, well then what about C and D? It's about realizing that the game you're playing isn't checkers, it's chess. And this quote right here, this gets to the why of it all. The investing legend Howard Marks absolutely nails it. See, if your thinking is exactly the same as everyone else's, you can only ever expect average results. The truly great opportunities are found where the consensus, what everyone else believes, is wrong. And to find those spots, you have to think differently.
So how do we actually do this? Well, it's a pretty simple four-step process. First, you observe some initial event, a new product, a news story, whatever. Second, you ask that key question, and then what? Third, and this is important, you have to consider how everyone else is going to react. And fourth, you just do it again. You ask, and then what? To trace that chain of consequences even further out.
Now, to make this really hit home, let's walk through a classic market story. We're going to compare how a novice investor and an expert thinker approach the exact same situation.
So our story follows the stock of a company we'll call next-gen tech, and it goes through three classic phases. First, there's the hype, right after a huge product launch. Then comes the peak, when it feels like the stock can only go up. And finally, the inevitable reality check.
We start in the hype phase. The product is a smash hit. The novice investor sees this, thinks it's a no-brainer, and jumps right in. This is that first-level reaction we talked about. Good news means buy. Simple as that. But the expert, our second-level thinker, they pause. They see the same good news, but they start asking totally different questions. Questions like, how much of this good news is already baked into the stock price? What are the market's expectations right now? And maybe the most important one, if every single optimist has already bought the stock, who's left to push the price any higher?
Okay, now we hit the peak. The stock is on every news channel. The novice is feeling that intense fear of missing out, that FOMO. They see the price skyrocketing and think the party's going to last forever. So what do? They buy more, often right at the very top.
The expert, on the other hand, is thinking about gravity. They know that when expectations are up in the stratosphere, even a tiny misstep can cause a huge fall. And they're asking, and then what? What's the natural consequence of all this amazing success? Well, it's a giant target painted on the company's back. You better believe every competitor is now racing to build a cheaper, better version.
And here's the final outcome. The reality check hits, competition shows up, and the stock tumbles from its peak. The novice, who bought late in the game, loses money. But the second-level thinker, who maybe bought early and sold into the hype or just avoided the frenzy altogether, they see a healthy gain. The difference here isn't luck. It's the process.
This isn't just about stocks. This way of thinking applies to pretty much everything. Let's look at a few quick, real-world examples of a simple, first-level thought versus its messy, second-level consequences.
Take the gig economy. The first-level thought was pure optimism. This is great. Flexible work. You can be your own boss. But the second-level consequence, which we're all seeing play out right now, involves these really complex legal battles over whether drivers are actually employees and, who should pay for their benefits.
Or think about the years of super low interest rates. The first-level thought was simple. Awesome, cheap loans for everyone. But the second-level thought asks, okay, and then what? Well, when money is just too cheap for too long, it can create these massive bubbles in things like housing or stocks, and eventually it can lead to really painful inflation.
And here's a classic business one. A company announces they're making big cost cuts. The first level, knee-jerk reaction is positive. Great, profits are going to increase. But the second level consequence is often a disaster in the long run. Employee morale craters, product quality suffers, the best people leave, and eventually customers get fed up and walk away. That short-term gain leads to some serious long-term pain.
So, how do you actually make this a part of your own thinking? It really just comes down to building a simple, repeatable habit. If you take only one thing away from all of this, let it be this. Whenever you hear a simple, popular take on the news, whether it's about the market or anything else, I want you to just stop, take a breath, and ask yourself that one incredibly powerful question. And then what? So, I'll leave you with a challenge. What's a common belief out there right now that it seems like everyone agrees on? Maybe it's about AI, or a specific popular stock, or the economy in general. Take that belief and apply the rule. Ask yourself, and then what? The answers you come up with might just give you the edge you're looking for.